One of my signal charts that I like to use has flipped to a more bearish sign, and I want to dive into that on today's stock market brief show. We saw ourselves a pretty large rally and we timed it rather well. So I want to follow up on some of the charts that helped really navigate this bounce that we saw today. And those happen to be some bullish percent charts. We're going to dive into the expected moves on today's video too. I'm going to try to keep it around the 10-minute marker. So buckle up. Let's get into it. All right, people, welcome back to the show. Out of the 11 sectors that make up the S&P 500, tech and consumer discretionary led the way. Go figure, right? I mean, that's typically what happens when you see a massive counter trend bounce. We sold off for a week or 2 weeks, whatever it was, and then we saw a massive bounce today. If you look at the heat map for the S&P 500, this was really driven from two names, well, maybe three names, but one being AVGO, so Broadcom. Yes, that is a large market cap name in the S&P 500, and it definitely holds some weight. Other than that, we had Google up about 6.3%, and then we had Tesla as well making its impact. But you do still see quite a bit of red on the screen overall. Now, what was this rally driven from? Well, there's a bunch of narratives out there. Perhaps one of them might be the market pricing in almost more certainty, a lot more certainty for a December 10th 25 basis point rate cut. You can look at the probabilities here. And if you look a month ago, there was a pretty high probability, but then that fell off a cliff, right? And then the market started selling off. And then all of a sudden we ripped right back up to an 80% probability that we will be seeing that 25 basis point cut. And as far as keeping it where they're at, you can see that that has been steadily declining. Now I want to go over some of the signal charts that helped us kind of really navigate this recent bounce in the midst of all this panic selling that we saw these last couple of trading sessions. One of the signal charts is something that I personally put together, and I haven't named it yet. So I've gotten some good names and some good suggestions. So if you still have some, put them out there. But this right here is helping me to find, bottoms in the market. And it's a sentiment gauge, and the red dots are highlighting when we got more of an extreme sentiment. This is what the chart looks like. We did come down into and around 15. So what I did was I looked for the times that we've came down to this more extreme level with this sentiment gauge that I put together. And it's actually led to some pretty good rallies. And well, I guess it played out pretty well so far. Now, I do want to add that I've now brought this data into stockcharts.com, and this will allow you to go back to like, hey, what did this do in 2008, right? Or the Great Financial Crisis, or in 2018, and all of this stuff. And it'll allow you to go back through history to see where the data's at. Now, I haven't made this public yet, but I do plan on creating a link I have to manually input this data, but I will be sharing that link, at least for now. I don't know if I'm going to be able to keep it up all the time. I'm looking for a better way to do that, but I am going to be making it public for the Discord, which is $16 a month. It includes all this stuff, but because they have been here and because you all supported me so much, I'm going to go ahead and give that to you guys, and I'll update it as much as I can, obviously. If you are interested and you're not in this, there's a bunch of different benefits of doing this. I'm not going to talk about them on today's episode. There's stuff that I don't even list in here that's in there, like the Asher bot and so forth. I want to carry on to keep this video a little bit shorter, but that is coming. Okay, so the signal that switched over is something called the old fool indicator, right? This is an old school trader, and it's called the old fool. And what they did was they took the NASDAQ composite, they divided it into the total put to call ratio, and then to smooth the data out, which is that purple line, they applied a 21 and a 50 period EMA. And when you see them cross over, right, the green line crosses up through the blue line, right? The small EMA crosses through the larger one. It is a buy signal, and the same goes true if it crosses down underneath the blue signal. It is a sell signal. Now, this is a lagging indicator, right? It's heavily lagging. Like, as you can see over here, the move bounced up a lot, and then all of a sudden it switched over. But thing is, it held that trend for a very long time, and it would have kept you kind of in this trade if you were just obviously looking at this. Now, recently we did cross underneath it, which means what? This would be technically an active sell signal. And from that point, right, if we just cross it down through here, we went down a little bit, we gapped up, and everyone's like, woohoo, and then we sold off into the close, we went down lower, and then today we rallied back up. So we're in the kind of heat of volatility. The last sell signal over here was actually pretty good, right? It's not like it came before the selling took place. The selling took place, then it triggered, but then we went into some more sell side. Over here was a whipsaw, right? It was red to green really quick. Same with over here, right? It ended up going down pretty significantly in a few trading sessions, ripped back up, pulled back down, and then it went green right over here to rally a little bit higher. And so I just wanted to call that out, that has suddenly shifted in just a recent trade. If we look at the Sailor to Shift tool right now, this is looking at the rate of change between Bitcoin and gold. This is something also that I put together, and it's caught in every big rally and it's caught in every big sell-off to get you on the right side of trade. And more recently, right, we had our sell signal, sell trigger right in and around this area. We had I think a couple of whipsaws throughout here, but it kept us out of Bitcoin. And that's a pretty heavy duty drop from about 107 down to and around 80,000 as it stands. And I wanted to show you this update because we're still not near a buy signal, buy trigger. But what I do want to point out is when the rate of change between Bitcoin and gold from a 4-week period gets pretty frothy, right? So you're seeing down here, like it's a pretty frothy move. Down here is a minus 25%, rate of change difference. Now it's at minus 22.45%. So it's just telling us that gold is outperforming on a 4-week basis a Bitcoin by that much. And the reason why I'm pulling this out is because when we've reached to these levels, it's actually a pretty rare occurrence to see this type of outperformance. And we've seen it here, right? That was the last time we seen it on this week of selling. And then what happened? We led to a rally. And then what happened over here in 2022? That was after some intensified selling. And what did we do? We ended up going to a rally and eventually getting into a buy signal, buy trigger. So is that going to be the same situation here? Well, I couldn't tell you, but what I can tell you is when you get strong selling directionally in one direction, it's very common to see bounce backs, right? We've seen that countless times. We talked about it here where it's likely to pull back up, right? We've seen this countless times. So a strong sell-off like this, are we going to see a bounce back? Yeah, potentially, right? Maybe sometimes you might want to look for a 50% retracement of this move, or maybe even a 50% retracement of this move into and around that 95,000, 9,700, and then 97.5, or even where we saw prior support before breaking down, and that's roughly at about 100K. All right. And I will note that gold still looks pretty darn strong here, right? We went through this pretty big reversal day, but what's it been doing? Well, we came off about 500 points, right, for 500 or so, right? And we came back up, we pulled back in, so we're putting in still higher lows, and price action starting to coil back up as it stands. If we take a look at some of the bullish percent charts, well, you can see here the BPSPX chart. We were moving into oversold conditions with a little bit of a bullish divergence, and we bounced up pretty significantly today. It wasn't a small move by any means. The bullish percent chart for the NASDAQ composite also is still in that oversold condition. And we've been talking about how that is also on a bullish divergence. And when this happens, after strong selling, where does price come from? Well, if it comes from strong selling and you're in these oversold conditions, these shorter term signal charts can produce some pretty awesome short-term buying opportunities. If you take a look at the bullish percent chart for the NYSE, same here, right? Oversold condition actually still, and it's not really a bullish divergence. They're kind of matching here, but still nonetheless, it's there. And then the last two here was the bullish percent chart for the technology sector. We talked about how it was moving into oversold, but more importantly, the reading itself was down here at about 15 to 16, and that's a pretty rare thing to have happen. If you date back over here to 2022, it's only been a couple of times, and each time that we went under, it led to a bottom pretty much of the sell side activity. And then we look at discretionary sector. You've had a bullish divergence forming there. So discretionary, right? Ones that can really help the market out, in technology, those more growth-oriented type sectors. Let's go ahead and hop into expected moves. So the expected move for the week on the S&P 500 is 6751 down to 6454. Now, every week this quarter, right? Every week this quarter, the market has tagged the weekly implied move. That you typically go weeks, a week here, maybe 2 weeks in a row without tagging it, but the market has actually been highly efficient, especially in the realm of all this volatility. So if the market wants to press itself higher, say tomorrow, right? This is a shortened trading week, right? So Thursday, Thanksgiving, Friday, shortened trading day as well, I believe, right? At 1 p.m. I gotta have to look at the exact time, but I believe that's the shortened trading day as well. So there's a lot of confluence up here. If price gets up here, you have your daily implied move aligned with your upper weekly implied move, and then you have your all-time high volume weighted average price. We are right near the gamma flip line, slightly above it, which means what? We're in more neutral to positive territory. So remember, if we start breaking down, selling can beget selling again. Do not count that out fully yet. It's still the case, but the conditions are getting a little bit better after today's price action so far. Now, for tomorrow's lower daily implied move, we got us down here at 6658, and we are now back with inside the monthly EM 6580. If I look at the daily implied move and weekly implied move for SPY, you have your upper weekly right here in this area, right where basically the range is for the daily, and then you have your lower here. If you want these numbers sent to you every day, every week, every month, right? These are all included in the Discord. I post them there all the time. And then also I have the Asher bot, which gives you these levels right here, which by the way, at the menu, to calculate these as it stands. So they'll be off by a few pennies or so, whatever, because I have to wait for my API to actually load that data in. And that typically happens at like 12 Eastern Standard Time or 12 a.m. Eastern Standard or 9 Pacific Standard Time. Now, if we were to get some sell side, as we're kind of here at that November volume weighted average price, the 5-day moving average, we are starting to get above that in a lot of these products. So SPY, Qs, IWM, semiconductors, right? XBI, and then DIA starting to get back above their 5-day moving averages. And after a strong day data like this, if it pulls in a little bit, consolidates, starts to tighten up a little bit, ain't nothing wrong with that. Just be aware if we shoot straight back up, and we start coming into the upper weekly implied move, S&P 500 up in this area after a very strong rally, this is not really the area you want to actually just execute right into. You want to see the consolidations. You want to see price take a little bit of a breather and then go for it. That's all I got for you on today's episode. Hope it helps out. I'll see you on the next.